Hi, good morning, everyone, and welcome to the next of our great No Limits Munch and Learn events. This morning, I have the great pleasure and privilege of welcoming Melissa Shuttleworth as my guest this morning. Now, Melissa, a little bit about her. She used to manage a team of health assistants at a nursing agency. I think, wow, Melissa, that's great. I think especially now, our coming from a country that doesn't really have a national health system. Wow, amazing, and so much respect. So well done you. Then you moved on to something quite naturally progressive from that, an admin assistant at an accounting firm, and then moving into the world of mortgages. Melissa worked in the mortgage industry, has worked in it for over 7 years now, started her own business 2 years ago, so she's like all of us, understands the joys and the tribulations. She genuinely enjoys helping people reach their goals of owning their dream home and striving to get the lowest interest rate. So apart from this, and away from mortgages, you'll find Melissa walking on the Dorset Jurassic Coast. Why wouldn't you, with her 2 dogs, or in a restaurant having good food and good wine, a lady after my own heart. So good morning, Melissa, and how are you this glorious day? Well, I always prepared to say this beautiful sunshiny day, but it's not.
No sunshine, but no, I'm very well, thank you. Thank you for that lovely introduction, Duncan.
Oh, that's an absolute pleasure. But you know what? At this moment in time, I love the rain. The rain overnight is fine.
Yeah, I agree. Yeah, by this afternoon, when we finish work, it'll be lovely and sunny. We sit outside.
There we go, on the Dorset coast, drinking good wine.
Absolutely.
Why wouldn't you? Tell me, I'm intrigued. Have you always lived down in Poole area and worked down there, or have you moved from somewhere else?
So I've always lived in Poole, but I did go traveling for a year to Australia.
Wow.
But yeah.
Carry on. No, please.
I'm sorry. So excuse me, when I was over there, I always had to be by the sea. There was such a gravitational pull to be by the coast. So yeah, I've always been near the sea, be it in Dorset or Australia.
Oh my goodness gracious me. Now, so thanks that you returned back to our shore.
Reluctantly.
Yeah, well, I being South African, I'm not going to comment much on the Australia side of things. But anyway, so you came back here, and as we've heard about your bit of your history, what made you get into the mortgage industry? What?
So when I came back from Australia, I'd saved quite a lot of money, because working over there, you earn quite a lot more than compared to here. Now, living expenses are quite expensive over there, but it's living in shared accommodation and traveling a lot, so not spending much. So had a lot of money, wanted to purchase my first property, spoke with the mortgage broker. That all went through, and I bumped into her a couple of years later and sort of got chatting and said, I want a change, want something different in my life. And then a couple of weeks later, she actually messaged me saying that they were looking for an admin assistant. Thought that she'd reach out to me, saw that it would be a good opportunity, but wouldn't be great pay at the beginning. So I thought, oh, I'll go along, I'll have a chat with the owner. Anyway, I did, and got the job, and yeah, never looked back. Took the pay cut, quite a drastic pay cut, but I thought something good's going to come of this. I had a really good feeling, and I thought, yeah, I'm going for it, and I did. And then yeah, started there about a month later.
So okay, with that admin assistant to mortgage advisor, take me through that journey, please.
Yeah, so it's a long process, but basically, when I first started working for the company, I was a admin assistant to the owner. So I almost learned how to sell a mortgage, if you like, or advise on a mortgage back to front. So at first I was chasing the solicitors and estate agents, and then I would start to chase the lenders, send over documents to the lenders, and then I'd start to chase the clients. So learning it backwards, I then decided that I wanted to be a mortgage broker, and I went through my exams, did all my learning, and which is quite heavy sometimes, but got through that and did my exams, and then became a mortgage advisor myself, so then I could advise clients on in the mortgage area.
Okay, well, that sounds like a hell of a lot of work. Just I'm intrigued. So going through this process and learning it backwards, I think that's a nice description of that. I can understand why you know, how important that would have been. But what made you say, actually, do you know what? I've done all this admin stuff, I've done everything like that, but I really want to be a mortgage advisor. What made you?
Well, the first 2 weeks that I was there, the office was such a mess and I'd sorted so much out. And then after that 2 weeks, I remember I went into my boss and I said, I need some proper work here. Like I'm this admin stuff, I was getting all the admin stuff done in the first couple of hours and then doing bits and pieces around the office. And I said, I need to do some proper work. And my passion is speaking with people and understanding their needs and what they want and feeling that excitement with them. So that's sort of where I progressed. I wanted more. I knew I could do more. So I wanted to go further in my career.
And then that passion, as you said, for talking to people. What is you talk about, you know, okay, you're a mortgage advisor and you have a whole bunch of, oh, hello, we've got another guest on the show today. Who's there? Hello. So wave at us. No Limits is a happy family thing. So you talk about, you know, interacting and how nice it is to interact with people and clients. What is your favorite type of client?
So I love a first-time buyer. And the reason why I love a first-time buyer is because they come and sit down with so much energy and so much excitement. And I love walking them through the whole process. Now, some of them want me to hold their hand throughout the whole process, and that's absolutely fine. Others sit down, absorb all the information and run with it, which is great. But sometimes I need to bring them back down to reality and make sure that they understand the complete process, because, you know, taking on a mortgage is a big responsibility, but, you know, it's lovely sitting beside them and going through the journey with them. And that's what excites me. So yeah, they're my favorite type of clients.
I think you'll probably find that quite a few of our listeners today, and those that listen to the recording, are potentially first-time buyers. So you mentioned a process. Would you mind just sort of high level so that we get an idea of what it is? I come along, never bought a property before in my life. I come in with all sorts of dreams, and I come bouncing into your office and I say, hi, Melissa, I have been recommended. You are great. I'm here. So what do we do? Take us through the process. Does that make sense?
Sure. Yeah, absolutely. Sure. So sometimes there's two different types of clients that come through the door. Clients that have found a property and need a mortgage ASAP and don't really know where to start, and others that come through the door wanting to know how much they can borrow. So when a client comes through the door that have already found a property, that have had an offer accepted and not even thought about a mortgage, I need to go through the process of understanding how much they can borrow and how much deposit they've got in place to enable them to actually purchase this property. So it's high energy and excitement, and that's where I bring them back down to reality. You know, 9 times out of 10, it's absolutely fine, and we can get the mortgage through and we can get the mortgage in place that they need. Whereas the other scale of things, people that come through the door that are just very much starting their journey, I sit them down, I understand exactly what's going on with their income and work out how much they can borrow. And then I have a look over interest rates and work out what their monthly payments are going to be. So they're a more cautious type of client that want to know upfront what they can borrow, want to know what they can afford to go and look at. And that's where I come in and explain to them the whole process.
If you could, okay, I understand that. So the two types, so one, oh, I've got my heart set on this beautiful place. God, I need some money. And the other one is, as you say, the more cautious one. If you had to advise people starting off, what would you advise? Would you say, let's go and find out how much you can afford and what you would be able to loan, or go and find a house that you like first? Which one would you advise?
No, I mean, I enjoy a challenge, of course, when they've already found a property, but the starting point and the correct way to do it would be to actually find out how much you can borrow, because and then, you know, find out how much you can borrow, and then we'd move on to do an agreement in principle with the lender, which is a background credit check essentially on you as a person, to make sure that the lender would lend to you in principle. Then with that information, then you go and start looking at properties.
Oh, okay. So the lender goes and does a whole check on you, and like a lender comes up and says, you know what? Everything being equal, and obviously there's a lot to do with the state of the property and where it is,
Yeah.
and the value, et cetera, versus the price. They can say to you, right, do you know what? Go out and have a look for a property of £250,000.
Yeah.
Okay,
Absolutely.
that makes sense to me, because
Yeah.
then I can go shopping. It's like when you go to buy your first car. You don't go to the Bentley and the Rolls-Royce garage. You're going to probably be sorely disappointed.
Yeah, exactly. So it's great to know your borrowing power. So your borrowing power plus the deposit that you've got in place, which may be coming from a gifted deposit, maybe coming from a Help to Buy ISA or savings. It's good to have the knowledge of the overall purchasing amount to then start to look at properties, because otherwise you're just going, there's no goal, and people just sort of fumble around wondering how much they can purchase for. And a lot of people come to me and they've got in their mind they could only afford a property worth 150,000. When in actual fact, once I've done their affordability calculations, they could potentially purchase a property up to 190,000. But because they're in their mind, they've just thought, oh yeah, I can borrow that, that'll be affordable. But that's why I always say, come and talk to me and we'll work out how much you can borrow, and then you can go and have a look.
I think that's very, very good advice. You mentioned there, and this is always sort of, I've wondered about this one. You talked about a deposit. What sort of deposit would one? Now I'm just leaving school. I hear all this doom and gloom about getting on the property ladder, and I need to save for a deposit. What sort of deposit am I looking at? How do I know how much to save?
So I'd say at least 5% of the deposit of the purchase price, at least. So, it depends on how much you can borrow, but I'd say for example, you can borrow 190,000. You could purchase a property for 200,000 as long as you had that 5% deposit of 10,000. Now, your deposit can be made up, like I said previously, by your own savings, the Help to Buy ISA, because then the government gives the uplift on the overall savings that you've got within the ISA, or you could actually have a gifted deposit. And a gifted deposit can come from a family member, a close family member. And some lenders extend that out to godparents and great aunts and great uncles.
Okay, I didn't realize that. So I can't just go and say, oh, I'm a nice person, here's £10,000.
No.
Oh, wow. Okay. Can we give?
Well, I don't know. If you want to give me £10,000, that's fine.
Sure. Oh, Melissa, I'll give you 20. The Help to Buy ISA, what could you maybe elaborate a little bit on that?
Yeah, sure. So it's a scheme that is in place with most banks. So you can contribute, I think it's up to £200 a month. And then when you come to purchase a property, as long as you're a first time buyer, I think it's 25%. Oh, you're really testing me here. So I think that the government give an additional 25% on top of that borrowing to be able to purchase your first property, to put towards the purchase. Yeah.
So for purposes of what we are saying now, if you wanted to buy £200,000 property, just I know you Poole and Bournemouth areas, and I know it differs all over the place. I think in London you'll probably get a postage stamp for £200,000, but just give me an idea, or us an idea, of what sort of property you could get for 200,000 in your area.
So in the Dorset area, you'd probably get probably a two bed flat. Okay, so not too bad. And property prices are leveling off. We're not seeing the huge spike that we did throughout COVID. But yeah, probably about a 2-bedroom flat. Okay, so
what's nice about that? So 2-bedroom flat, £200,000. Let's go back to the Help to Buy ISA. I've saved up £7,500. The government would pay the extra 2.5, and there I've got £10,000 for my deposit. Yeah. And okay. Oh, look, I think that's fantastic. I think I think just listening to you talking about that, it really sort of opens up a few doors that I didn't realize were there. So on that, what would you say, and I think we've probably covered it, but What is the biggest difficulty for first-time buyers? Is it that deposit?
There's two things. So yes, it is a deposit, and I am seeing a lot of gifted deposit from family members, which is great. You know, it is really lovely. But the second side of the difficulty for first-time buyers is affordability. Because, you know, especially for young people that are wanting to purchase on their own, single young person wanting to purchase on their own, they can't borrow as much as with a partner. But there is another option for them, which we call a joint borrower sole proprietor, which means
that was the subject we said here. So just
yeah.
Joint borrower sole proprietor. So what does that mean?
So the sole proprietor means that they own the property and their names are on the title deeds. The joint borrower doesn't actually have to be on the title deeds. So they're on the mortgage for affordability purposes.
Is that a bit like the old, in my day, when my dad stood guarantor for me type of thing?
Correct. Yes, it's like an old school guarantor mortgage. So they don't have any, they're on the mortgage for affordability, but they're not on the title deeds. So that's where the beauty of saving on stamp duty is. So if they own a property in the background, if you were to purchase another property, then you have what we call additional stamp duty. But that borrower can come on just as that guarantor, if you like, just for affordability purposes, to boost that one person's or two people's but overall borrowing power.
That was the next question I was actually going to ask you, Melissa. Two people. So if and I'm going to ask this in a way. So I would kind of understand that myself and my wife, legal entity life partner, would qualify as a you know, two proprietors, so we could.
Correct. Yeah, correct.
What about my my girlfriend, my boyfriend? And there's no legal
that's fine.
Really?
Yeah, absolutely. Okay. Yeah, you two can both be on the mortgage and both be on the title deeds of the property. You can both be proprietors, and then you could have your mum and your dad, or their mum and their dad, or their brother, your your grandparents. But you know, it is age restricted, so it's we have to think about that, the second person's or third person's age as well, because that does come into consideration for the mortgage term.
No, okay, that makes sense. We got a question from someone today. I think it probably ties in with this. You mentioned the second property and what do you call stamp duty and things like that, and it wasn't necessary. What about what sort of percentage deposit for a second? So this is going away from first-time buyers. We've already got it. We've got that flat. Oh, brilliant. Now we want to buy a second property. Do we have to put a 5 or 10% deposit down on that as well?
So taking away the whole joint borrower sole proprietor thing, and I'll come back to that, because I think this question is relevant for that for that subject as well. But if you were to purchase a second property, then yes, there are lenders that would do a 5% deposit.
Oh, okay. Are they?
Excuse me, carry on.
Is say now, I know this is probably overcomplicating things, but if I've had my property now, my first property for 5 years or so, and I've paid off a certain amount, so there's equity in it. Can I use that as deposit or not really?
Yes, absolutely. We could release the equity from your existing property to then put towards a new property, and that you can keep that property in the background.
Oh, wow. That's what you mean about keeping that property in the background. Okay.
Yeah. So if it was a second residential property, then obviously it would be affordability assessed on both of them. But if you were to keep your original property and turn that into a buy-to-let mortgage, we call that a let to buy. So then you move over. So that's sort of the affordability side of things, that washes its own face, because it's now a buy-to-let mortgage. You're going to have tenants in there covering the mortgage and a bit more, and then you release enough equity to be able to purchase your new property. So you just need 5%.
And then that's where you go. And okay, I think it's because this ties in. Okay, before I go any further, is there anything else you want to sort of talk about the joint borrower sole proprietor? Or can I ask you
So
another
I
question?
think, so going back to the question that was asked in the community, I think that the percentage of the second property, because essentially the person that's coming onto the mortgage as the joint borrower, they may own a property in the background. Some lenders stipulate that you have to own a property in the background to be able to have this type of mortgage. And if that's the case, then you could just put a 5% deposit down on the joint borrower sole proprietor type of mortgage as well.
Okay, now that's actually quite interesting, because I think this whole affordability thing, the one thing that I won't say concerns me and worries me, but it's always in the back of my mind. Us self-employed small business owners, I mean, affordability is a bit of a risk there, because I mean, it's not like, I'm getting a salary, I'm working for a big company or whatever, and there's my annual salary. How do lenders look at that?
So for self-employed applicants, they want at least a 2-year track history. So they would take an average of the last 2 years. One lender will actually take the latest years, as long as there's been a healthy jump. So, but if there's quite a gap, then lenders will take an average of the last 2 years and assess the affordability on that. Some lenders may want a projection from the accountant, but it's mainly done on the income that's showing on your tax return. Excuse me.
Okay, so now I know the issue that I think a lot of us will be sitting thinking, oh, okay, the income that showed on my tax return, on my accountant, I don't get a very high salary, and when I'm self-employed, all my company is paying me. So is there anything else that comes into, do they actually look at the company's books, or is it just me earning very little, if you understand what I'm saying?
Yeah, of course. So I think what to mention here is that you're maybe thinking about a limited company.
Yes.
So yeah, so there's a limited company, obviously, and then you've got sole traders. So your sole traders, they will take an average of the last 2 years self-employed earnings, which is quite straightforward, and pretty ticks all the relevant boxes, and is very similar to sort of a salaried income from an employed income. And then you've got your limited company, and the limited company, the way that the lenders will assess that, if you own more than 20% of the shareholding of that company, you are automatically classed as self-employed. So some lenders will just take your oh God, I can't think of the word, your self-employed income, but other lenders will actually take your salary and your dividends.
Okay.
And then there's another caveat to that. They will take your salary and share of your net profit. So if your net profit is quite large, because you don't need to take any money out of your company and you just pay yourself a basic salary, so they'll take your basic salary and your share of net profit, because your salary and dividends would be considerably lower if you're trying to build up the net profit within your company.
Okay, so all right. Now that's great. I think
it is quite confusing, that subject, but I think that it's for me to understand. When I get the books from the accountants, I can have a look through and I know which lender's best to go to, because if you've got a high share of net profit and your standard salary, that's great. There's a couple of lenders that will do that, and the affordability is great on that type of mortgage. Whereas they may have taken all of the profit out of the company in a form of dividend and salary, and then I'd have a look and assess which lender's best to go to on that basis for the maximum affordability.
Okay, all right. So I think bottom line, people, is complicated.
Yes.
Don't try and do it yourself. Go and speak to Melissa and whoever's in your area, and I think that's definitely worthwhile. Melissa, just coming back to I think the joint borrower thing, if I can, for a minute. There was one thing you said, right? So, and what made me think about it is the old guarantor. So my father, my mother are going to go and do that. What sort of legal things do they have to, are there any legal hoops, or would you advise them getting legal advice?
Yeah, sure. So the lender will stipulate that the joint borrowers, borrower or borrowers, however many there is, they would need to seek independent legal advice. But it's quite straightforward. There are companies that do it online. And the reason why the lender would want them to do that is because they want to make sure that they know exactly what they're getting into.
Yeah.
So not that it's anything bad. They just want to make sure that they've had the legal advice and they are 100% happy with everything that's going forward.
I think that's very, very good, very wise. I know someone years ago from a previous life of mine that stood guarantor for someone, didn't quite understand the implications. That person didn't make payments and everything, and all of a sudden their responsibility came out. Like, oops, type of thing. So I think that's very good advice. Melissa, I could carry on talking forever, and the questions that keep on coming through, but we just don't have the time, unfortunately. So what I'd like to suggest before I ask Melissa her last question, please, people, go and get your questions. Go and look for Melissa. She's on No Limits. She's one of the pioneers. Go and seek her out and go and ask the questions, or go and either message her or message Karen. I'm sure Karen will be more than happy to pass those on. So the last question, if I may.
Sure.
What is the most rewarding thing about being a mortgage consultant?
So the most rewarding part of my journey is when my clients call me and they're so excited. Oh my God, Melissa, I'm on the way to get the keys to the property. I can't believe it. I'm so excited. Thank you so, so much. So that to me really, really sings to my heart, and it makes me emotional sometimes. My clients don't see that. I come off the phone, I'm like, oh, wow, another one's gone through, and I'm so pleased for them because I just sense their excitement. And it's so exciting because each chapter to someone is their new journey and a new start for them. And it's just thrilling to be there at that moment. So that is the most rewarding part of my overall mortgage advisory journey, I guess.
I love that. And I think that's so true with so many of us that are in the service industry. It's what the person, that client, how you make them feel.
Yeah.
And that's a beautiful thing to be part of that. I really do love that. Well, we've got 2 minutes left, so I don't think there's any time for questions. Much for coming on early this morning and chatting to us about mortgages. I think I hopefully you will do this again, and I think there's so many different aspects to mortgages, especially today with these interest rate hikes and anything. So a leaving thought from you?
My leaving thought is, please don't be scared by the media. Talk to someone professional, understand the process, and understand how much you can borrow before you start going and have a look at properties.
Wonderful. Thanks very much, Melissa. Really appreciate that. Thank you for your time, and have a wonderful holiday in Europe now.
Thank you very much.
Okay.
See you later,
everyone, and please be sure to join us next week for our next lunch, not lunch and learn, munch and learn. Wonderful. Thank you.
Thank you. Bye.
Cheers. Bye-bye.